Hello, everyone, and thanks for making the time to come to our talk. I'm very excited, a little bit intimidated to be up here with three very smart lawyers to kind of talk about the intersection between decentralization, tokenizing real-world assets, and law and policy, obviously. So just to start, I'm going to steal the title of our talk. When it comes to real-world assets and tokenization, does decentralization matter, and why? Want to start us off?
Sure. I think with some real-world assets, especially those that are based on clear commodities or products that are very close to traditional commodities, maybe doesn't matter as much. The more that a token starts to look more like a security, the more decentralization may matter. And I kind of split it into three areas. With respect to the SEC, it seems that based on current statements from SEC Chair Atkins and recent SEC guidance, and we can get into this, but it seems like the SEC cares less and less these days about the concept of decentralization. Then we've got two pending bills in Congress. The one from the House side seems to believe decentralization still is quite important. And then the Senate bill, in my view, is kind of in between, has decentralization not necessarily the most important concept in the bill, but it does recognize decentralization as an important element. And then a little bit outside of the securities law context, I want to note that decentralization is still important to important state legislation, especially the DUNO legislation in Wyoming. So that's a broad overview, and happy to get into some of those details.
Sure. We'll circle back to some of that.
For sure. Thank you, Veronica, and a pleasure to be here, everybody. I certainly agree with Rob to a large extent. I'd say it does matter, and I want to contextualize how it matters. I think one of the most exciting things about the direction the current SEC, in particular Chair Atkins and Commissioner Hester Peirce, have been leading is the idea that what is important to markets is credible neutrality. And what we really need to see in markets is the term decentralization, I find, confuses people. What exactly does it mean? And they over-index on that term. What we need are credibly neutral platforms in markets. Rob, as you say, different types of assets require different levels of trust. And securities inherently generally involve trust. You're giving value to someone else, and generally when you buy equities, not getting anything other than a share of stock back. So there's already a trust layer there in terms of the investment. What people want with either decentralization or openness is a credibly neutral platform where they know wherever they trade, whether that's in New York, in Sao Paulo, Brazil, in Tokyo, Japan, that they're going to get the same outcomes. And that's something that blockchain delivers better than anything else. And I think that credible neutrality is going to continue to be absolutely central to the RWA tokenization movement.
Yeah, so I agree with all that. I'll speak to it more generally also. I think there's kind of three benefits of decentralization, why I think it matters. One is credible neutrality, right? So everything that Lewis said. I think the other really powerful benefit of decentralization is this idea of on-chain state, right? So if you have centralized permissioned actors who are responsible for updating the state, like it happens in TradFi, right? You don't get things like continuous attestations or like continuous real-time proof of reserves and transaction finality. You have to depend on intermediated players in TradFi to do like periodic reporting and reconciliation, right? So that's a really powerful benefit of decentralization that I think is it's something that like benefits not just institutions, but it also provides for, I think, more robust regulatory oversight. And it decreases like operational burdens and compliance burdens and things like that. So that's one thing, right? I think on-chain state and proofs are always going to be superior to periodic disclosures and periodic reporting. And then the second thing is this idea of composability, right? That is something that decentralization uniquely enables. So I think, you probably will end up with hybrid models when you're talking about, crypto sort of meeting the real world and the compliance needs of institutions. There are always going to be institutions out there that need to have permissions at some layer of the stack, right? To be able to comply with AML and sanctions requirements, accredited investor checks, qualified persons checks, things like that. So institutions probably will always need some form of permissioning. And we're seeing different structures emerge that I think could work. But I think what is really important to preserve, like where decentralization will be important in the stack, is when you're talking about the execution logic, right? So maybe you have to be KYC'd to be able to mint and redeem an RWA or a stable coin. But after that's done, you should be able to take that tokenized asset, whatever it is, maybe even a security someday, and transact with it in DeFi in a permissionless manner, right? So I think when it comes to institutions adopting and interacting with DeFi, there probably will always be some permissioned layer, but I think it's really important to keep the execution logic permissionless so that it can be composable, right? So once you have your token and it's set to some common standard, whether it's an RWA, a stablecoin, a security, whatever, once it's set to some common standard, you want to be able to sort of plug and play with different DeFi protocols, right? And that is something that decentralization enables. Mm-hmm. So that's what I would say.
Yeah, I want to pick up on that. I think you kind of answered this, but if you have more to say, please let me know. A lot of the folks I know in the audience here are more on the institution side of things rather than like the crypto native side of things. And when I read about real world assets, it's very clear that institutions are very well sold on the idea of increased efficiency, cutting costs and increasing speeds. But there's a lot more to decentralization. There's these kind of cypherpunk values that come up in more crypto native spaces when we talk about decentralization. So if you were to make the case to institutions, what else is valuable about decentralization beyond just efficiency? If you have more to say, please jump in, but let's start with Lewis.
I think why decentralization, or again, as I prefer to say, credible neutrality is so important is because really, for the most part, we have systems of national-based markets right now. One of the biggest things that, in addition to the points you make on composability, one of the biggest things that blockchain networks bring to the table is an absolutely global means of coordinating financial activity around the world, independent of national barriers. Those national barriers make sense when there are rules needed to provide sort of barriers to entry for one reason or another. But I think decentralization or open networks allow everyone to participate in the same network at the same time. We talked earlier about 24/7 on the same basis. I think that's incredibly attractive to capital. I think that's why many of us are here in this room and at this event. It's attracting huge amounts of capital because it is simply the best coordination layer that we have. And we won't have that coordination layer if you have to rely on someone's private chain. Unfortunately, then you have to work by their rules. So open and decentralized networks really enhance global coordination and infuse tremendous amounts of capital into the system.
Yeah, I agree with Lewis, and my message to an institution as to why decentralization is important from a technical perspective is that it enhances trust and security over the network. And institutions here in the U.S. are used to using and managing some of the most resilient centralized networks that humankind has ever built, but I think there's still some learning to be done and some knowledge to be shared as to how much more robust blockchain networks are above and beyond even the most secure centralized networks that we've got in the US market. And I think once institutions open their eyes and understand that, they'll recognize some of these benefits that Lewis was explaining about how we can expand markets that we're used to here in the US. We can expand those globally across borders and into jurisdictions that traditionally don't have those trusted centralized networks. And by doing so, expand some of the operations of institutions here in the US and globally.
That's it.
Yeah, I don't have anything to add.
Okay.
Also, we're going to have to disagree with each other about something.
I know. Help me out. So now we kind of know where everybody up here stands on decentralization. I want to talk a little bit about the SEC and SEC Chair Paul Atkins' views on these issues. When he announced Project Crypto, which, if you're not familiar, is kind of the SEC's initiative to modernize securities regulations to adapt them to crypto, he referred to decentralization theater. And then recently at the SALT conference in Wyoming, he also called decentralization often like a red herring. What did you make of those statements? And like, how compatible do you think SEC Chair Paul Atkins' way of thinking is with the benefits to decentralization you all just outlined?
Yeah, I can start. So
Sure.
I think some of his statements about decentralization related specifically to like the Howey test, right? So how should we, right? This is something both Congress is thinking about and the SEC is thinking about. How should we determine if a token is a security or not? I don't think he is a fan of taking us back to like the 2019 SEC CorpFin like 65 factor like test of whether a token or a blockchain network is decentralized. Like, I think we should move away from that. And I think that is his view. I think he, on the other hand, does see the benefits of decentralized software systems, right? So in this big speech that he gave announcing Project Crypto, what I thought was really remarkable was his recognition that there's a role for decentralized software systems like automated market makers or AMMs in the securities markets, in the capital markets of the future, which is not something I expected the SEC to say, like for another 20 years or something. So the fact that he recognized that and wants to make room for it as we think about how to transition capital markets on chain, the fact that he recognized a role for something like an automated market maker and decentralized software is I mean, I think that's pretty remarkable and exciting. So I think that's sort of how he's looking at it.
Mm-hmm.
Maybe I would add, certainly not disagree, but we'll find something to disagree about. Sky is blue. What I'd add is I think my take on Chair Atkins is that crypto a little bit is the tail wagging the dog for him. And I think that's why he sort of has de-emphasized decentralization directly. Chair Atkins famously dissented from the commission vote on adopting regulation NMS for securities markets. And I think, being aware of the background that, up until, say, the late 60s, I think, the New York Stock Exchange controlled, give or take, 95% of all trading. There was a legitimate concern about centralization there. And I think it's an instructive lesson. Regulation NMS, which was sort of effectively mandated by a congressional statute from the 70s, was trying to break down that monopoly. But by doing so, it created new barriers to entry. And I think Chair Atkins sees decentralization, or at least crypto, as really more of a stalking horse for opening these markets up. So, for example, can Coinbase trade Apple stock? Can the New York Stock Exchange trade Bitcoin? And ultimately, I think Chair Atkins believes in the power of markets and the ability of crypto to enable markets. I think that's, for me, my takeaway of what, where he's going with this.
Do you agree with that perspective?
I think it's a bold experiment, and one I'm excited to see the outcome of. I'll just say that.
Yeah. So, another really interesting thing he said in his Project Crypto speech, when talking about, potentially moving capital markets on chain. So it's no secret, right? He's not a fan of regulation NMS. And regulation NMS, it's something that was passed in 2005, I believe. And there are a bunch of rules that help to ensure that there's competition and transparency in the markets when it comes to filling customer orders, and to make sure that customers are getting the best execution, things like that, when their orders are filled, right? So there are a bunch of rules that help to ensure that. He's not a fan of Reg NMS. And so one of the I think more interesting things he said in his speech was, as we think about how to move capital markets on chain, maybe we need to rethink Reg NMS and how it can be modified, maybe thrown out, I don't know. But how can we rethink it to accommodate tokenized securities markets? So I don't know if he has things in mind, but I actually think it's something that the industry should really be thinking about. Like, what is Reg NMS trying to accomplish, right? If you're trying to promote fairness in the execution of customer orders, are there things about blockchain technology or about the architecture of on-chain markets that can accomplish that without having to have heavy-handed prescriptive regulation? So I think, that it was just one statement in his speech, but I think the industry should really seize on that and take it seriously.
Super quickly, I'm going to give a plug. V wrote a terrific article, just published only a couple of months ago, on the history of stock trading, looking at the paperwork crisis and all the way up through today. And I think you can find it on SSRN. V won't plug herself, but it's an excellent article and well worth reading.
What about you?
I'll give another perspective on the Project Crypto speech, which some of the earlier panels have mentioned, and I absolutely do recommend that folks read it. There's a lot in there. But one takeaway that I had from the speech is that the word decentralization can have sort of two different meanings, one on the technical side and one from the perspective of securities regulation. And I think that's important to understand as you read through Chair Atkins's comments, because from that lens, you can see that Chair Atkins is very supportive of decentralization as a technology and wants to facilitate wider use of decentralization in markets. But on the other hand, it does not favor the concept of decentralization as it's been applied to the test as to whether a token should be considered a security. And this harkens us all the way back to the 2018 Hinman speech, where the term decentralization was originally brought to the conversation from a securities perspective. And in Chairman Atkins' comments at the SALT conference, he recently explicitly disagreed with the Hinman speech. And so what that tells us is that decentralization will become less and less important in terms of the test for whether a token is a security, at least from the SEC's perspective, while at the same time, the SEC is going to take steps to continue to support decentralized technologies in our financial markets. Which
is very interesting to me because from my non-lawyer perspective, just looking at public statements and the way that lawmakers and regulators talk about decentralization, it seems very different than the conversations we see in Congress right now. In the House, we have the Clarity Act, which is, they don't use the word decentralization, but they use the word control. And there's like a control test for deciding whether a token should be a security or commodity. We see a slightly different approach in the Senate with ancillary assets. But it does seem like there's some interest in like incentivizing decentralization there. Am I right to see that as in conflict with Paul Atkins' statements? And do you have a preference on which approach is better?
I found somebody to disagree with. It's our moderator.
All right, go.
But seriously, I don't think it's in conflict. Veronica, and I'll quickly explain why. I think, Chair Atkins, either in that speech or subsequently, said, absolutely, decentralization is not the factor determining whether a given asset is a security. But he also said he believes the vast majority of crypto assets are not securities. The Senate bill, known as the Responsible Financial Innovation Act, very much doubles down on that and focuses on the intrinsic nature of a given asset. And I think that's the right way to look at it. As some may know, we wrote a long article back some years ago that basically focused on the same point, which is whether or not a particular asset is a security is a function of its character. Whether transactions that asset are securities transactions depends on all the Howey facts and circumstances. And I think Chair Atkins has come out very strongly for that. And I think it's better for certainty. Markets crave certainty. when a person does not know whether they're engaging in a securities transaction because they can't evaluate extrinsic factors, they tend not to transact. And that's what we saw with institutions not transacting in digital assets under, unfortunately, Chair Gensler's position. Chair Atkins, I think, is adding certainty and clarity and therefore much more activity.
Yeah, so I think like as an industry, we kind of just have PTSD when we hear the term decentralization, right? Because for so many years, like it was sort of synonymous with like regulatory like death, right? But that's, I mean, like the point of decentralization originally and still was not just to escape like regulatory, like regulation, right? There are other benefits of it, like we talked about before. And so I think that's like, we sort of need to have a reset in how we think about this idea of decentralization. I think the other positive thing the SEC is doing when it comes to this is, okay, you know, if we do have some sort of decentralization test, maybe it's not a 65-factor test, maybe it's like a more workable version. That also shouldn't mean like being deemed a security because you're not sufficiently decentralized or whatever the test is also should not be a death sentence, right? And so I think the SEC is also taking positive steps in that direction so that if you are deemed a security, you can, you know, there will be like a workable registration regime. Like it doesn't mean the end of your project, right? So I think we just need to sort of rethink how we talk about decentralization and what the purpose of it is.
And I'll add that while we're absolutely moving in the right direction in terms of getting toward a place where there's more clear rules of the road and less focus on a highly subjective decentralization type test, I do think we're not quite out of the woods yet. There's still a lot, I think, that needs to be worked through and reconciled. So the House bill and the Senate bill is a big one, and there'll have to be a lot of reconciliation there in terms of to what extent the language that ends up in those bills will rely on whether it's decentralization or a test like a mature blockchain that is reminiscent of decentralization. To what extent something like that matters or to what extent it's not as important. And it'll be really interesting to see how those two bills get reconciled. And then in parallel, I expect that we'll likely see SEC proposed rulemaking that provides clear rules of the road with respect to distributions and sales of tokens and how to draw the lines between securities and non-securities. And those proposed rules likely will not rely on decentralization as a test. And so then we'll have some proposed rules that are out there, probably a public comment period going on. And in the meantime, we'll get legislation passed at some point in the future. And so then there'll be additional reconciliation that will have to happen between the approach that the SEC takes sort of in the short term and then the longer term approach that would be as part of a comprehensive law that eventually gets passed. So we're not quite out of the woods yet. And there are still some smaller areas where, from a legal perspective, we'll have to deal with this term decentralization, especially in terms of how to govern things like DAOs, decentralized autonomous organizations, DeFi, DePIN. Those are some of the things that the Senate bill in particular makes really good and interesting exemptions for, but has to use that term just to simply define the activity. So we're never going to get away from having to deal with that term from a legal perspective.
And I know we're coming to the end of our time, but just on the congressional bills, one thing I want to make sure to ask about is, because we're at a real world assets conference and talking about tokenization, the Senate bill specifically has like a tokenization clause in it. It's quite short. My non-legal understanding is that if it's a security off-chain, it's a security on-chain. Is my understanding of that correct? And is there any additional clarity or that is required there? Or is it sufficient as short as it is? Whoever.
I'll pick up on that. I think it is a very important statement, and I think your point on PTSD, there we go, is absolutely right. I think there was this idea that if you create a token, somehow you fundamentally change the nature of the relationship, either for better or for worse. And the senator saying, look, the means by which representation of a set of rights is, whether it's on a piece of paper, on a centralized ledger, on a decentralized ledger, whether there's a token or not, all of those are irrelevant. Let's look at what the actual economic relationship is between someone who owns that and someone who's issued or sold that. And if those rights are financial in nature, it's an interest in a business, it's an obligation of a business, it's going to be a security, whether it's a token or not. And if it's not going to be a security. And I think that kind of clarity gives the market the sort of certainty to move forward. It's a very exciting time.
Awesome. Well, I think that's a great place to end it. So thank you so much. Thank you.
Thank you.
Thanks.